Houston, we have liftoff. This week, the Reserve Bank raised the official cash rate by 25 basis points from a record low of 0.1%. The cash rate now stands at 0.35%. This was the first cash rate hike since November 2010 and marks the beginning of the end of ultra-cheap money. It comes off the back of a strong inflation report last week, which blew the Reserve Bank's estimates out of the water. Headline inflation came in at 5.1% and was the fastest in nearly 21 years. Critically, it was well above the RBA's target band of 2 to 3%. Annual trimmed mean inflation, which removes volatile components and provides a better measure of underlying cost pressures, surged to a 13-year high of 3.7%. Supply-side disruptions have been a key factor driving inflationary pressures since the depths of the pandemic. However, price pressures have broadened across most spending categories, and inflation expectations are around a 10-year high. Following its April meeting, the RBA suggested that the board were inclined to wait until the latest inflation and wages reports were released. But with the surge in inflation and wage pressures increasing across the economy as businesses compete for workers in a tight labour market, the Reserve Bank couldn't afford to wait any longer. The RBA also significantly revised up its inflation forecasts. The bank now expects headline inflation to rise to around 6% in 2022. Underlying inflation is also expected to be strong. We expect the economy to continue to strengthen through 2022. Our base case is for the unemployment rate to fall below 3.5% in 2022 and to hold under this level through 2023. This would be the lowest level of unemployment since the 1970s. A strengthening economy and falling unemployment will also support wages growth over the next 2 years. More rate hikes are expected in the months ahead. Our core view is for a 40 basis point hike in June as the RBA moves to quickly remove the emergency rate cuts implemented during the pandemic. However, a 25 or 50 basis point change is also a possibility, and upcoming data will be critical in determining the size of the move. We project the cash rate to rise to 1.75% by the end of the year, with a further 2 hikes in the first half of 2023. Markets expect the RBA to hike more aggressively. At the time of recording, markets were priced for the cash rate to reach around 2.75% by the end of this year. The time for emergency interest rate settings is over. The RBA will now have a balancing act on its hands as it seeks to normalise interest rate settings without undue impacts on growth.